Hello, everybody. My name is Melissa Stringer, and welcome to episode 5 of the 11FS Newsroom. In this weekly show, we take a deep dive into the biggest news story of the week just gone. And before we get started, just a shout out from our sponsors. This episode of 11FS Newsroom is brought to you by Radar Payments, consulting payments to commerce worldwide. The Radar payments take out the complexity of payments to let banks, neobanks, PSPs, and fintechs solely focus on delivering a frictionless customer experience. The white label one-stop service lets you service payment instruments, keep the widest range of payment methods online, in-store, in-app, and over 100 currencies. And you can run your own payment business, putting your brand at the forefront. To find out more, visit www.radarpayments.com. So today we are talking about Consumer Financial Protection Bureau's, that's a bit of a mouthful, request for information around consumer access to financial data and what this might mean for the US fintech scene. So before we start, I'm just going to quickly do a little recap on what happened. So on the 22nd of October, the Consumer Financial Protection Bureau, or CFPB, issued an advance notice of proposed rulemaking, ANPR, requesting information related to consumer access to financial records. In issuing the ANPR, the Bureau is asking the public how it might most efficiently and effectively develop regulations to implement Section 1033 of the Dodd-Frank Act, which provides for consumer rights to access financial records. The CFPB is asking for input from stakeholders, be it consumers or like customer advisory groups, industry members, or trade groups. So to find out more about this, we're going to be speaking to an expert. We're going to be talking about how this proposition might be affecting the fintech industry generally. And his name is John Pitts, Head of Policy at Plaid. Hello,
Morning.
John.
How are you, Melissa?
I'm good. How are you?
I'm just thinking about the fact that the one skill I've developed in life is my ability to say things like CFPB, NPR on 1033, yes, like very rapidly, and like I actually know what I'm talking about, and that maybe shouldn't be a valuable skill in the world, but it's the skill that I have, so I'm going to do the best I can with it.
Well, thank goodness. I might leave you to the acronyms, and I can struggle through them. You can take the mick out of me as we go.
I've got a trick for you if you want one for the CFPB. Having had to say that acronym so many times over the phone for so many years, if you just remember chicken fried peanut butter, that'll get you the order correct every time. And is just a really nice way about thinking about a government regulator as chicken fried peanut butter.
Okay. Yeah, I might give that a try. Definitely will have that in mind as we chat about this. I think it would be quite helpful, actually. Okay, so as always, to everybody watching the show, we love getting your questions. So please leave them in the comments sidebar and we will be answering them live for you. John did actually say before the show that he loves tricky questions. So please get them coming. All right, so John, let's just start by introducing you and what you do at Plaid, please.
Sure. So I'm the policy lead at Plaid. My job is really to work with all of our key external policy stakeholders in every country that Plaid operates. So right now that's US, Canada, UK, Netherlands, France, Spain, and Ireland. Fortunately, I have a really, really excellent team that does all of the work to actually make that possible. I long ago ran out of the ability to hold all that in my head. But our key role as a team at Plaid is really to be the sort of point of translation between what's happening in the industry and what's happening in the regulatory space. A lot of what's happening in open finance is new. It's really exciting. It's fundamentally changing consumer financial products for tens of millions of people. But that sort of is rubbing up against regulatory regimes that are often 30, 40, 50 years old and still think about things in terms of fax machines, not APIs and digital connectivity. And that means there's a lot of work to sort of explain back and forth sort of what's happening and what do we need to do to make sure consumers are still protected as the world changes around them.
Definitely. And yeah, I think it's incredibly interesting and fascinating in various different markets. It's not just happening in the US or the UK, as you pointed out. I know that Plaid are sort of instrumental in these conversations in Canada and Ireland, as you're saying. So maybe we can dig into that a little bit later. I'd be absolutely fascinated to hear more about that. I think if you could also give us a little bit of oversight into what you were doing before Plaid, because I think you had quite an interesting job before Plaid as well. Hey.
Yeah, I was at Chicken Fried Peanut Butter, the CFPB myself, before I joined Plaid, in an office there called the Office of Intergovernmental Affairs, which is one of those things where even if you're in government, you may have never heard about that before. So it's a bit obscure, but I thought it was the most interesting place to be. And the reason why was the CFPB is a brand new agency, and it was very brand new when I joined it, operating with sort of a new set of powers and responsibility that came out of the last financial crisis in 2008. And the thing that sort of was critical to do with a new agency, with new powers coming out of a financial crisis, tens of millions of people really needing help, was figure out how all of the other agencies work together with this new agency and how all the states and everyone else sort of understands these new authorities and uses them together to help consumers. Intergovernmental Affairs was the office that sort of helped make that coordination happen. And it was a really cool opportunity to sort of do a startup within government, probably a once in a lifetime one for me. That started changing about 2/3 of the way through my career at CFPB. We had sort of figured out most of the big issues around, like, how do we use these new powers? How do we work with the Fed, the OCC? Probably didn't figure them out perfectly, but any of the errors were probably mine. For the thing that began changing was it wasn't just new powers. We started seeing these new companies crop up, these fintech companies who were offering things that were really, really different. And it actually started with cryptocurrencies and all of the agencies sort of getting together and figuring out, like, hey, are you guys responsible for Bitcoin? Or are we? Like, who's in charge of this? And the more I started getting into fintech and sort of figuring out who is responsible for consumer protection in fintech and how it all works, the more I became convinced that fintech was sort of one of those once in a lifetime shifts in how financial services works for consumers, sort of on par with like the creation of FDIC insurance for bank accounts. It would dramatically change what financial services look like. And the core of that was the consumer having the ability to control their own financial information and use that control over their financial information to get a better deal or get a better product that fits them and is personalized to them. It's a really, really stunning shift in how you think about financial information. It used to be just like a thing that gets generated and left on a piece of paper and like no one does anything with it, to it is now one of the consumer's most important financial assets, and their ability to leverage it sort of changes their power and their choice when they're shopping for a financial product. So I got really interested in that idea. And then when I saw an opportunity to join Plaid, the company that builds a lot of the infrastructure for that data control, I jumped at it, and that's what brought me to Plaid.
Yeah, I mean, I think your knowledge is absolutely tremendous, and just so fascinating to hear about some of the genesis of these things and some ideas. And it makes me think back a few years when people were talking exactly as you say about cryptocurrencies and sort of ICOs and who is sort of in charge, who's holding the reins on this stuff. Is it a little bit of a kind of cowboy environment, but also quite exciting? And yeah, it's a bit like mining for gold, I guess. Yeah, like the wild west, so to speak. But so do you think that this sort of conversation around open banking and data protection and making sure that the consumer is protected first and foremost. Do you think that that's something that has evolved because of these new products and new opportunities that are coming into the market? Or do you think that it's something that the regulators are sort of leading and constructing themselves?
So it's a super interesting question, because I think it's different for each country, and depends on how long you want me to talk about this. But I would let me start with the U.S. and we can expand from there if you're interested to do it. I would push back sort of a little bit on this sort of Wild West framing, because this is not a new idea. While it's sort of new at this scale, there have been elements of this sort of evolving over time, and the biggest driver has been consumer demand. It has been, I, the consumer, like Venmo, I like Robinhood, I like Drop, I like Shopify. These are things that add to my life, and therefore I want to have the right to have access to them. And it turns out having access to them means I have to be in control of my own data, because that's what's required for me to use those products. I think what you're seeing now in terms of the US development is there's been a lot of attention by regulators over the last 10 years on sort of what's evolving in the market. And I think a fair level of comfort in the US on what was happening, and how some of the open questions were getting resolved. So there were questions about, like how should a consumer access their data? It's moving really heavily right now in the direction of API-based access for consumers, which is what Europe is using. And that issue is slowly getting solved by the market. But there's a couple of things that sort of haven't been resolved yet. And I think the US regulators are looking at the current landscape. They even say this in the ANPR, and they say, we're seeing some practices just starting to emerge that we think are inconsistent with the consumer's right to access their data.
Right.
We would like to sort of jump in, having given plenty of space for the market to evolve, and see if we need to address those one or two sort of spot issues that appear to be either persistent problems or starting to move in the wrong direction, meaning move against the direction of the consumer's access right.
Yeah. So we've got a question from Richard Dupree, but just before I introduce that question, for scene setting for everybody listening, can you tell us a little bit more about the recent announcement and what will actually change? So what they're proposing and what impact it might have.
Yes, let me do the part of my job that if I can't do this part, I can't have this job, which is take a regulatory process and turn it into plain English. So nothing has actually changed. The advance notice of proposed rulemaking is a list of 46 questions, though some of them are multi-part questions, so it's 111 questions. The CFPB is asking everyone these 111 questions. There's 90 days for everyone who wants to respond. And after everyone has responded, the CFPB will take the responses, sort of look through them and say, okay, do we need to pass a new regulation based on this feedback? And if so, of those 111 topics, which ones are the ones we should pass a regulation on? Assuming that they want to move forward with regulation, and the way I read this ANPR, it does seem very comprehensive, and like they do think this is a moment for a regulatory advance in the market. There will then be something called a notice of proposed rulemaking, where they will actually propose a rule and get comments back on that proposal, evaluate those comments, then they will propose a final rule. And then there will be an implementation period for everyone to adjust to the final rule. So what we are really seeing right now is this is the starting gun of a 2 to 4 year process. Nothing will really change until the end of that process from a legal perspective. What will change is companies like Plaid, banks, fintechs will start to see what the likely outcome of that legal process is and start sort of planning for a world in which we've got a little bit more structure and some more resolution to the open questions in open finance.
Sure. Okay.
Did I do it? Did I explain that?
You did it. You did the thing. For sure, you did it. Right, so Richard Dupree is saying that he loves chicken fried peanut butter. And his question is, does this requirement allow consumers to scrub or delete their data similar to CCPA and I believe GDPR? Could I see this as CFPB seems to act as a complier of requirements across oversight bodies?
So I think that's a good question. It's, I think, slightly the wrong lens to look at this from. The CFPB, their jurisdiction here is Section 1033 of Dodd-Frank. It's 75 words long. It says consumers have the right to access their financial information in 75 words. What now needs to happen, I think, based on the CFPB's ANPR, is a sense that, okay, those 75 words don't actually say enough about what that consumer right looks like. How do we need to sort of expand on that right and make it clear, for example, what data can a consumer access? There's open questions. There are some FIs that take the perspective of, well, you don't have the right to access your interest rate or fees because those are proprietary to us. You, the consumer, don't have the right to do that. I think that's incorrect, but I think that's the kind of thing where resolving what's the scope of the consumer's right will be important. There are questions on privacy and security in here, Richard, to answer your question directly. I think some of those will be something that the CFPB can address in terms of, what rights does a consumer have to turn off data or delete data that's been shared via 1033. Plaid has already done an extensive amount of work on sort of creating some of those tools for consumers if they're on our network, because we think it's sort of not only where things are going, but also the right thing to do for the consumer. But the CFPB doesn't have the same jurisdiction that a European agency would have to sort of impose GDPR. That would probably require a separate act of Congress to either create a new authority or give it to an existing agency to create sort of a comprehensive privacy regime.
Yeah, I think your comment around the level to which the consumer can access their own information, I get what you mean, because actually the way that data is stored or used or I guess analyzed could be proprietary. So you may wish to provide additional lending products to a certain demographic, or you may wish to reduce friction for certain payment sizes, or like a certain cohort of your customers, given the data that you're collecting and analyzing. But when we're thinking about the respondents, so the individuals, companies, and I guess providers as well, like Plaid, right? So when they're responding to this, they're probably going to be responding to their own benefit, I would imagine. And so how would one define the correct path, or how do you imagine that the CFPB will be able to determine what's right, what's in everybody's best interest?
Yeah, so that's a great question. I think it's great because it's got a super simple answer, right? Which is the consumer. Okay. What is in the consumer's best interest, right? Because all of us are really just serving the needs of our customers and the best interest of our customers. And one of the things that struck me from the way the CFPB framed this proposal is they said this really, really critical line, which is that data access and sort of the products that have emerged from consumers having control over their financial information has created competition in many, if not most, financial products and services, right? They're just fundamentally saying this is already actively changing the industry. And the question is the consumer benefiting from those changes? Plaid actually, just by coincidence, published a survey that we had conducted over the course of the summer, a nationally representative survey of US consumers. We published it on the same day this thing got released. And those survey results were striking. They showed that, in the 70% realm, consumers felt like they had more control and were getting better results using fintech products. The survey results showed that the average consumer making under $100,000 a year was saving $360 a year by using fintech rather than a traditional service. So I think in terms of like, given that the CFPB has framed this up as, we think fintech, and in particular, the fintech offerings that rely on the consumer being able to access and share their data, can improve every single financial product on the market right now through more choice and more competition, means that if your company is in this business, yes, you should be filing a comment from your perspective. It's in fact essential that you file a comment on this. But your perspective is, how is your customer doing better with your product than the other products that are out there? And the answer is probably going to be something along the lines of, to use the interest rate example, because my customer was able to share their interest rate or their fees on their bank account, I was able to offer them lower fees, lower interest rates, a better product. They are saving $40 a month using me versus a competitor. That's the crux of this. If the consumer's access and control over their data is giving them better outcomes, that will give consumers a very strong data right in the US and allow this growth of fintech to continue to flourish sort of on that infrastructure of consumer data access and control.
Right. And what about, I guess, third parties as well that don't directly offer something, but they might plug in and use this data and be allowed to access data, I guess, if the consumers say so. I mean, in the UK, we've got one really good example. We've got many, actually, but one that I particularly like called Snoop. And it basically analyzes your spending. So you can plug in multiple different accounts. It analyzes your spending, and then it will suggest cheaper alternatives for you. So it could be a utility bill change, or it could be, a grocery store that you shop at all the time, and there might be a cheaper alternative, for example. Do you think that this openness of data is beneficial just generally for consumers? And do you think that any of these, I guess, additional regulations or additional scrutiny will impede innovation for the sort of secondary or tertiary market?
Yeah, so two really, really good questions. There's a company I love in the US that I think is a very similar example to the one you just gave in the UK, called Savvy, and they work on the student loan market. Student loans are the most complex financial product that we put in the hands of an 18-year-old. They're probably more complex than most financial products we'd be willing to put in the hands of a 40-year-old. And the reason for their complexity is, there are all different types of loan type. Each of those loan types has different types of sort of payment plans attached to them, different payment plans based on whether you're in public service, based on whether you're low income, all sorts of considerations. That means deciding what to pay, which plan to ask for, which one to pay in which order is a really, really hard problem. And there's no reason that 50 million individual students should all be trying to work that problem themselves, right? Because there is a right answer. If you've got the availability of the data, it's, to someone who knows what they're doing, advising you on what to pay, what program to be in is fairly straightforward. So open data gives that possibility. Open finance gives that possibility of the consumer saying, yes, Savvy, here, have access to all of my information. Tell me what is the best path here, or advise me on the best path, and then I can make my own choice. I think that's critical. And I think the scope of this right now, I don't, to your second question, can regulation impede this? Maybe, right? It's a question of do they get the regulation right? Let me give, not to pick on the UK, but I'll pick on you guys
it's fine. We expect it.
I think there's a good lesson from the UK market, which is open banking started by just covering payment accounts. And it turns out your life as a human being, your financial life is not your payments, right? No one actually thinks about their money as being just their payments accounts. You think about it as your pension account, your savings account, your mortgage, your insurance, all of those things. That's the full 360-degree view of your finances. I think the error in open banking was by starting with just some types of accounts. that no consumer thinks of as being their financial life. And now you have this move to open finance because I think there's been a recognition that open banking was artificially narrow. And
Yes.
so the right thing to do is to expand out to all of the consumers' financial accounts. My hope is, and I think the thing that drives the most innovation and choice is if the CFPB sort of learns from that lesson, and if Canada learns from that lesson and says, okay, the right thing to do is start big, start with everything that the consumer cares about for their money, and let's sort of build the right tools and controls for the consumer on everything. That's what drives the real innovation. That's what drives the best use cases for the consumer.
Yeah, I completely agree. I think one painful example is, wealth management in the UK is still quite opaque. And anything to do with pensions and investing, I think the US is leaps and bounds ahead of where we are at the moment, which is a shame because I think, we've got the pipes to be able to deliver all of this stuff. It's just, I think there are a few knots in the system that we need to unpick. But yeah, I think you're right. I really take your point. So another question that I had that was kind of burning in my mind is I know that Plaid is having some really interesting conversations, around open finance and open banking in Canada and in various other geographies as well. So with respect to the chicken fried peanut butter scenario, if you're a fintech company and you want to expand into the US, or maybe you already have offices in Canada and you're thinking about a US Canada type play, to what extent do you have to worry about this stuff? Do you only have to worry about it if it's if your head office is in your like the UK or Canada? Do you just have to worry about that, or do you have to have somebody like you on board and be able to navigate all of these complex issues, regionally?
So you unfortunately do have to navigate these issues regionally. And I know that from sort of the painful practice of having to try to go into multiple markets with different regulations. Let me talk about what I think is an ideal world in the future, and then like what the obstacles are to getting there. Fintech companies, when I think they think about their market, no fintech founder that I've ever talked to has said, my market is the UK and I never want to expand into any markets other than that. I'm not really concerned about offering my product to the global market. If your goal is sort of expansion and being able to have a customer base and a TAM that is really worldwide, ideally, you want to be able to expand into countries where sort of the regulation is basically the same as the one you started with, right? You understand how data access works. You understand what's okay and what's not okay. That can be really challenging when multiple countries are writing their rules simultaneously on what open finance is going to be. I think in an ideal world, you have companies like Plaid and all of our competitors who are sort of offering that core service of we facilitate the data access, we handle the consumer consent, we work with the consumer to make sure that you sort of the TPP or the third party have access to this customer base and understand the rules of the road. We specialize in that so that you don't have to, as you expand from country to country, basically redo your entire systems, build 30 different versions of your company to operate in 30 countries. That's a real challenge, though, and the reality is, for the next couple of years as we're in transition, companies are going to need to strike a balance between being policy experts in different markets, relying on specialty service providers like Plaid, and also sort of figuring out which countries may be a good fit for them and which countries, because they've sort of moved off the mainstream in their open finance regulation, may just not be a good fit until the rules change.
Mm-hmm. Yeah, and I think maybe people could be interacting with Plaid already without realizing. I think I read somewhere that is it 1 in 4 US citizens have used Plaid to an extent to connect their different financial products together, even if they didn't know that they were actually the tool itself was powered by Plaid.
So it's a slightly different number than that because it's 1 in 4 U.S. accounts rather than citizens, right? You know, we can track accounts, but not individual people.
Right.
And there are some people with multiple accounts who you know would skew that number a little bit. But I think this is actually really important and ties back to the NPR. All of them actually do know that they've interacted with Plaid. Plaid has made sure, and we think it's the sort of the right way to structure this market, that as you are connecting your bank account with your app, you know that Plaid is the company doing that connection for you. And the CFPB in its ANPR actually says something about this. They say, you know, in a four-party market, how should this work? And that four-party market is really, really important conceptually from a consumer perspective because it says there's the consumer, the bank, the app, and the data network. And all four of those sort of entities need to know each other and need to work with each other. I don't think it works to just have sort of someone behind the scenes doing this for the consumer without the consumer knowing who they are and knowing where to go if they need help. So we've made an emphasis of sort of being very visible to the consumer, making our role very clear. It looks like from this ANPR, the CFPB is thinking around the same lines of you, the consumer, need to understand who you're working with as you do this. I think that's a really, really important element. It's only a single sentence in a 40-page document, but I get paid to read single sentences in 40-page documents and say which ones I think are interesting. So that one to me is a really interesting one from a transparency and control perspective.
Mm-hmm. Okay, and is that germane to every geography, or would it be different for you guys in the UK?
Yeah, so it's really in the UK we're also always visible. Right now, there's no geography that I've seen that would sort of prevent that from happening. But like I say, the rules are sort of always going to be in flux until they get set up in each country. So every country that I go to, one of the things I ask for is make it really clear to the consumer who's involved in this process. The consumer deserves to know, but we have to see what every country decides.
Okay, so I think that I'm getting the nudge that we need to wrap up soon. But before we do, is there anything sort of new and exciting that you particularly love that you'd like us to know about Plaid?
So I think the single most exciting thing, I already talked about it very briefly, is the results of this survey. This is the first time that all of us are in the fintech business. We all have lots of ideas about how fintech is helping consumers. No one has done a comprehensive survey of consumers asking them what do they think about fintech, right? What value is this adding to their life? The numbers are fascinating. One of the things that jumps out to me the most is there is a history, unfortunately, in this country of financial exclusion. Low-income people, minority people being kept out of financial services, practices like redlining. One of the hopes that I've always had, and I think a lot of people in fintech have always had, is that in building a new financial services world, it's a more egalitarian one where it's more ethical. People have access no matter who they are. What we saw in the survey is that the use of fintech products by low income and minority people is just as high as it is for high income and white people, right? So within the Black community in the US, fintech use by demographic is actually higher in the Black community slightly than it is in the white community. That to me is suggestive that we are starting to get some stuff right about lowering those barriers to entry and making sure that not only are the products better, but they're available to more people, and in particular available to people who have been sort of left behind for generations by traditional financial services. That's what I'm most excited about right now. My product people are probably yelling at me that I should be talking about like a new product or other thing that we have, but to me, like, it's the consumer outcome and better consumer results that are the most exciting thing right now.
Yeah, it sounds really fascinating, and I can't wait to read it. Incidentally, do you have a URL that we should all navigate to?
I do. Here, hold on. I'm going to pull it up live in real time. which is definitely a best practice for an interview. So everyone can go find it at our blog. The best place to go is plaid.com/thefintech-effect2020. And if you just want to go to our blog, which is probably easier to remember, it's blog.plaid.com. There's a little entry from my colleague, Ben White, who did most of the research work here, that breaks down the study and also provides you a link to the full report.
Awesome. Thank you so much.
Thank you. It's been great talking with you today.
Yeah, you too. I've learned a lot, so yeah, it's excellent. I like peanut chicken. I forget the acronym already. I'll go back and burn it.
Chicken fried peanut butter. If I've accomplished anything today, it's that the entire 11FS audience now has that stuck in their heads for the rest of their life.
Okay. All right. So we're coming to the end of the show. Thank you again, John. You've been awesome. Where can people find more about you and what you're getting up to?
Yeah, so best place to follow me is on Twitter. Policy Pits is my handle there. And I definitely have many thoughts on this ANPR, what it's going to mean for fintech, what it's going to mean for consumers. All of those are probably going to be, to some degree, unfiltered, spilling out on Twitter over the next couple of weeks. So find me there.
Perfect. All right, so that's all we've got time for. Do not miss another live show though. We've got Spotlight, which goes live on Thursdays at 3:30 p.m. BST, which I think is 10:30 a.m. Eastern time. And this week we are joined by the one and only John Hope Bryant from Operation Hope. Also super important from our side, in case you missed it, our new report, Better Banking Business Models, Embedded Finance and the Path to Growth. This is honestly a must read for banks considering the smartest next step, and relates a lot to what we've been discussing today. So to read that, head over to bit.ly, which is bit.ly/banking as a service to download the report for free. That's bit.ly/banking as a service, all word, all lowercase. Have a great week, everybody, and goodbye. And thanks, John.
Thank you.